Okay, we're live.
Yes.
Sherry? Okay, great. Okay, so I'd like to call the annual meeting of the Kentucky Retirement System to order. And with that, we can have Michael read the legal public statement.
Yes, ma'am. This is a regular meeting of the Kentucky Retirement Systems Board of Trustees. This meeting is being broadcast via video teleconference pursuant to Kentucky Revised Statute, Section 61.826, and may be viewed by the public at the Kentucky Public Pensions Authority offices located at 1260 Louisville Road, Frankfort, Kentucky. It is also being broadcast to the public via Facebook. I ask if you are speaking and not appearing by video, please identify yourself before talking. In the event the video or audio broadcast is interrupted, we will attempt to reestablish a connection. If a connection cannot be reestablished within 30 minutes, the meeting will be adjourned and rescheduled to another date. Thank you.
Thank you very much, Michael. And Sherry, the roll call
Yes, Ms. Hampton,
here.
Mr. Atkins,
Here.
Ms. Bova,
Here.
Ms. Eves, Mr. Lane,
Here.
Dr. Miller,
Here.
Mr. Piercy,
Here.
Mr. Summers,
Here.
Ms. Thompson,
Here.
and I'm seeing Ms. Eves coming on right now. Let's make sure that she can hear us.
Yes, I can. Thank you.
Okay, thank you. We'll notate that you are in attendance. Thank you.
Thank you, Sherry. It looks like everybody's here. And are there any public comments?
No, ma'am, no public comment today.
Okay, next on the agenda.
I'm sorry, Ms. Hampton, I meant to.
I got it.
Okay, sorry.
Got it. Okay. The next on the agenda is the approval of the minutes of March 13th. Are there any comments or changes to the minutes?
Move approval.
Thank you,
A
Dave.
second.
Is there a second? Okay, thank you, William. All those in favor, please say aye.
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 Okay, the motion passes. Thank you very much, or is adopted. Okay, the next I'm going to turn this over to John for the election of officers. John?
Thank you. Good morning. This is our annual meeting, so the election of officers is a major item on the agenda. We'll deal with, we want to do the chair and the vice chair, I think. So let's do the chair first. Are there any nominations for chair for this next year until the next annual meeting?
I'd like to nominate Lynn Hampton.
I'll
Okay.
second that.
Any other nominations? Okay. Hearing none, Lynn, you're the only person that's been nominated, so we'll vote if there's no discussion on it. All in favor of Lynn Hampton as chair for the next year, say aye.
Aye.
All
Aye.
opposed? Any opposed? Any abstentions? So Lynn, you are the chair for the next year. Congratulations.
Thank you, John, and thanks to everybody for your support. And I will say this, I told John this has been learning KRS by drinking from a fire hose, but thanks to all of you all. And I want to say that I think that the board and the continuity on the board has been really supportive to the staff, and our staff is great and the material that they give us. So it's really been a real privilege for me to serve as chair. The next thing we have on the agenda is the election of the vice chair. And are there any nominations? the current vice chair is Pruitt.
Nominate Pruitt for vice chair.
I'll second that.
Thank you, Ramsey. Thank you, Dave. Okay, are there any other nominations? Okay, all those in favor of Pruitt as vice chair, please say aye.
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 Okay, so Pruitt, congratulations. And why don't we maybe have a board meeting with you somewhere in the world? We'll travel over to Croatia or somewhere, you know. So the next on the agenda is the appointment of the KRS Investment Committee and the committee chairs. And I sent a note out to everyone earlier to ask if anyone was interested in switching their committee. I will say everybody that noted said that they were fine with their committee assignments. And so I will, with that in mind, we'll have Pruitt appointed as chair of the investment committee. And let's see, Crystal, you're the rest are representatives on the committees. So if everybody's still happy, we'll just stay with our current committee assignment. Then the next thing is over to Steve with the PPW Board of Directors election.
I think Rebecca is on. Rebecca, correct?
Yes, well, I can be. Am I on?
Sorry.
So it is time for the KRS board to nominate 2 folks for the PPW director positions. This is basically a proxy issue. We need PPW is the 501c26, I think, entity corporation that owns the buildings that we rent. We are the only stockholders. We are also the only renters at the moment. That's not always been true, but it is true now. Every year they reelect directors, the shareholders reelect directors. And so the KRS board nominates someone to be the KERS representative and someone to be the state police representative. All 9 of you are eligible for either of those positions since you're trustees of both KERS and state police. The current directors that you guys had nominated, previously, the ones that served last year are Keith Piercy and Ms. Hampton.
I'm not sure. My notes say that Steve is in charge of this one.
So the board will nominate 2 candidates to be on the ballot. And then we will request that in accordance with the KRS investment policy and the investment proxy voting policy. So those 2 candidates will go on the ballot. And then I will be serve as the proxy, or if you approve, I will serve as the proxy in accordance with the IPS and your proxy voting policy statement to vote those proxies on your behalf at the annual meeting.
Thank you, Steve. Okay, is there anyone besides Keith and me that's interested in coming on the PPW board? Keith, are you willing to serve again?
Well, I have no choice since, as Rebecca just pointed out, one of the members has to be the SPRS representative. So, yes.
Okay. Is there
Madam
anyone
Chair,
else interested? Yes.
I would move that we nominate Ms. Hampton and Mr. Piercy as our nominees and authorize Mr. Willer to vote proxies accordingly.
Second.
Thank you. Thank you, Dave. Thank you, William. All those in favor, please say aye.
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 Does it count if my husband is in the background and objects? No, just kidding. Okay. Is there anyone opposed besides Denny? Okay. So looks like the nominations for PPW continue, and hopefully that's helpful to the staff. Okay. The next is, I'm sorry, Rebecca.
I just agreed with you. It's very helpful. Thank you so much.
Okay, so the next is to Steve. Oh no, to Mike Lamb, the ACRFR recommendation.
Thank you, Ms. Hampton. There is a memo in here that documents all of the research that's been performed over the last several months regarding the presentation of the ACFR. I won't go through the entire memo, but the first page is the summary as well as the recommendation. It's my recommendation, with the support of the KPPA executives and my staff, that starting with June 30, 2024, that KPPA publish 2 ACFRs, one for the County Employees Retirement System and one for the Kentucky Retirement System, including the KERS system and the SPRS system. This comes with lots of research. The gist of the research came whether through the GASB definition of a PERS, not the legal definition of a PERS, but the GASB definition. I've concluded that KPPA meets the definition of a PERS and then therefore can decide how to present the ACFRs in which they are, the financial statements of the systems in which they administer. And it's my recommendation that we go ahead and do one ACFR for C and one ACFR for K.
Thank you, Mike.
I think,
Go ahead.
it's pretty vague on who approves this, but I felt like the motion that was made in the C meeting yesterday was appropriate. It basically, the motion was made to endorse this recommendation and to go forth with that. But again, this is also K's own meeting, and I would like for that endorsement, but it's totally up to you, and I would field any questions you have.
Mr. Chilton has his hand raised.
Yes, thank you. Mike, as I understand this is the comprehensive report, which has a lot of detail that about the operations and demographics and all that. There's also the short form report, which the trustees would be most familiar with, and probably the community would be most familiar with. We will, on the short form, is the proposal to just have one of those in the future?
So this memo just deals with the ACFR, the full financial statements, which is 200 and something pages long. It is, through my research, there is no GAAP guidance that dictates how the summary form or the SAFR should be done. I think that's totally a management decision. It's my recommendation that SAFR continue to be one book. It is only 27 pages long. It's a summary of all of the systems that KPPA administers. It's short, it's informative, and it's the more used document by the trustees as well as the legislatures. And again, it would be my recommendation in the future to continue to issue one SAFR comprehensive of all the systems.
Mr. Atkins has his hand raised.
Dave?
Thank you, Madam Chair. Mike, has the KPPA taken a position on this, or is this essentially a recommendation by the 2 boards to the KPPA as they make the decision? I guess I'm trying to figure out who is the ultimate decision maker on this, and are we looking to add our voice to others to KPPA, or has KPPA already approved this and we're looking just to add our endorsement?
So KPPA has yet to approve it. I think the statutes are vague on who has the authority to approve it. If you look at the C statute and the K statute, they are each charged with producing an annual financial comprehensive report. So each statutes for K and C have a requirement to produce. I think it's KPPA's decision on how that's produced, because they're sort of the administrator of those systems. The way that we've done it in the past is all those systems are in one ACFR, which through my research I've concluded that that's also allowable and in compliance with GAAP. So I don't, if there's a legal comment on here on on who should approve it, I don't know. I think we're unclear on how it is. So that's kind of why I brought it to every board to get their feedback and endorsement, so to speak.
But the statute requires it. So the only nuance here is that we're approving a separate report for the KRS system. Or we're essentially saying that we would publish our own in
Correct.
compliance with that statute.
Correct.
Okay.
Mr.
Any-
Eager has his hand up, I think.
Yeah,
Dave?
the question came up yesterday, will this increase the cost of producing because you're doing 2 documents now? And the answer is very, very marginal because we no longer actually publish books as we did in many years past. So it simply goes on the website and essentially no cost implication.
For the publication, there is some increased cost for the audit of 2 separate systems, but for the publication of 2 reports, because we do it virtually, there's minimal cost to the publication of them.
And Mike, is there any screen between receiving the report from the outside auditor and the publication? Or is the publication of the independent auditor's report automatic?
I'm not sure I understood the question, but there will be a separate audit opinion in the C report and a separate audit opinion in the K report, and they'll be published likely in early December after the C and the K meetings approve those reports.
I see.
Are there any other questions? Mike, I have a couple questions. One is, will KPPA be the top title under both or above both of the reports?
I think that nuance is yet to be worked out. It's probably in the examples I'm looking at. I really like the examples that Alaska have, and Alaska names the retirement system first, and then maybe the administrator of that system down below. So I would envision that the top of that report will be the county employees retirement system and the Kentucky retirement system, and maybe name KERS and SPRS below that with KPPA down at the bottom.
Okay. And the numbers that are in it are going to be the split that we approve every year in the budget. Is that correct?
The administrative expenses should probably be allocated based on the split, yes, but the all of the other assets, the investments and the contributions and whatnot will be just for the individual plans under those 2 systems.
Okay. Okay. Thank you. Any
Miss-
other questions?
Miss Eves has her hand up.
Yes.
Mary, please.
Mike, will the timing be the same, that both reports will be issued at the same time?
Yes, both reports have to be issued timely in order for them to become, where they're both component units of the state, and they have to be done in time for the state to put them into their own ACFR. The state actually gives us a letter that requires them by October 31, but they give us a waiver, and they want them the first week of December. So that's pretty much our deadline. Both of them
But
will
will
need to be done.
I understand by the deadline, but will they be the same time both reports will be issued? I guess.
Yes, I envision both reports being issued the day of or the day after the applicable board meeting approving the reports. I envision the C board approving the C report. I envision the K board approving the K report. And those meetings are in the first week of December, usually the 6th and 7th, a day apart.
Thank you.
Okay. Thank you. Any other questions? Okay. With that, Mike, you mentioned the way that CERS approved theirs through just a recommendation to the KPPA. Is that correct?
I think their wording was a motion to endorse the recommendation made by KPPA staff to have 2 ACFRs.
Okay. Michael Board, can you kind of just say what that motion would be?
I think it would be perfectly as Mike Lamb just stated it, that they're asking for a motion to endorse this recommendation for KPPA staff to produce 2 ACFRs.
Okay, thank you. Okay, there's the motions being said. Is there anyone that would like to make that motion?
So moved.
Thanks, Dave. A second?
Second.
Okay, any more discussion? Okay, all those in favor, please say aye.
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 Are there anyone opposed? Okay, the motion passes. Thank you very much.
Thank you.
Okay, so now we are at Steve, investment update.
Thank you and good morning. One page forward, please, Sherry. Thank you. We wanted to provide a very brief update on the portfolio's markets, and there was a specific request to cover something in regards to the expectations for the Fed over the remainder of the year. As we know, following the soggy market conditions in January, which saw portfolio performance that ranged from up 2 basis points to down 10 basis points, markets and performance rebounded sharply in February. Portfolio performance for the month ranged from positive 1.51% and 1.58% for the lower risk portfolios to positive 2.10 and positive 2.20 for the more well-funded portfolios. Reported portfolio performance trailed benchmarks by between 16 and 44 basis points for the month. But we anticipate the portfolios will make up most of that underperformance when valuations for our alternative investments are updated for March. Remember, most of those get updated on a quarterly basis. So intra-quarter, they reflect their prior quarter's markets. And so they don't show any performance impact. Equity markets regained momentum, pushing higher on the resurgence of optimism in AI-focused stocks, despite the backdrop of fading optimism over the extent of 2024 U.S. rate cuts. Defensive assets were down for the month of February as core bonds lost 141 basis points on the back of rising rates. Commodities were down almost 150 basis points, and real assets produced negative performance. Turn the page to March, and we saw a continuation of the themes from February, with the S&P closing the month at a new record high, up almost 3.2% for the month. And a positive sign, something that we've talked about in a number of meetings, the equity rally broadened out and became much less reliant on the so-called Magnificent Seven. In fact, the equally weighted version of the S&P 500 outperformed for the month, which was the first time that's occurred in a while. Risk assets welcomed yet more strong economic data, as well as Chairman Powell's indications that the Fed still planned to cut rates this summer, despite 2 months of hotter inflation data. Treasuries rallied early and then sold off after that mildly hot inflation data, and yields for the month were nearly unchanged across the curve. In public equities, the U.S. outperformed non-U.S., small cap outperformed large cap, and value outperformed growth, which was a change from prior months. Core bonds, high yield, and real assets all participated in the rally, producing positive performance for the month. Performance for March is still very preliminary for the portfolios. We're still getting marks to come in on a number of assets, but portfolios are indicated up around 2 to 2.5% for the month. So another strong month for all of the portfolios. Page 26, please, Sherry. Thank you. The allocation data shown on this page looks at the portfolios as of March 22nd, so at the time, the most up-to-date information that we had, and really indicates the progress we have made implementing the new asset allocation targets and ranges that were approved earlier this year. I know this is a little difficult to read. I think we're probably going to move to something that may be a little easier to read, but it's a lot of information on one page here. And while we've been really disciplined in rebalancing the portfolios, currently all of the asset classes are within their allowable ranges, with the majority of asset classes within less than 2% of their respective targets. So we've been able to make a lot of moves and move all of the assets closer towards their targets. Again, we're being prudent in that we're taking a view on opportunistic times to move assets, weakness in equity markets. We're not looking to take large chunks out. We're looking at periods of strength to reduce our equity exposure and move into core fixed income, specialty credit, and the other asset classes. We expect to sign the SABA management agreement today. And again, that's that real asset or real return new manager that was recently approved. And we expect capital to be called this week. Again, if you remember, that was one of the reasons we were excited about that investment opportunity, was their ability to call and deploy, invest our capital very quickly. We expect them to ramp up. So again, that will continue to move our real assets or real return closer towards our targets. Page 27. Thank you, Sherry. Over the next several pages, we put together some nice graphs and bullet points on the outlook for the Fed and rates. But as I often say in these meetings, this information already feels stale and like it's ancient history. In fact, this discussion could be stale by the end of this week, or even by the end of this meeting, the way markets are moving. The question being debated daily in the markets is, when will the Fed start easing and how much will they end up cutting? The situation, in our view, remains very fluid, with sentiment seemingly shifting with each new piece of economic data that is released. While the talk of the potential for the Fed raising rates has come into the conversation, even a few weeks ago, it seemed like a significant outlier. That conversation has picked up in the markets over the last few weeks. Our current view is that the likelihood of additional hikes is extremely low, but we can't completely rule out the possibility, and it's going to be very data dependent. We're currently comfortable with the view that while rates may move higher from current levels, especially in the intermediate and longer parts of the curve, may test cycle highs, we've likely seen the peak Fed funds rate for this cycle. As we know, the FOMC left policy unchanged at their March meeting, though the surrounding communications were more dovish than expected. And the dot plot indicated that the committee is nearly divided, with the median projection remaining at 3 cuts for the year. And despite the median core PCE inflation projection rising to 2.6% for 2024. Chairman Powell endorsed the 3-cut majority, saying he viewed the elevated inflation readings in January and February as a bump in the road that did not change his expectations that we were on the path back to 2% inflation. Since that March meeting, markets have really been pushing back on the timing of expected rate cuts in response to stronger data, rising commodity prices, especially oil. And that includes last Friday's very strong non-farm payrolls release. We don't think the Fed needs to see a weak labor market to begin in cutting rates, but will be guided by readings on wage growth and inflation, which we expect to continue to show progress toward the Fed's objectives in the near term. We really feel the Fed has a bias towards cutting rates this year. I think that they've expressed that pretty strongly. And our expectations are they will begin with a 25 basis point cut in June and cut a total of 75 basis points for the year. The other thing that is a little bit of an outlier from our expectations is that this easing cycle will be gradual and more prolonged, primarily because it's a normalization of monetary policy rather than a response to a growth scare or recession. As we know, in those scenarios, we tend to cut deep and we tend to cut quick. Obviously, the FOMC, the Fed, the governors don't feel that's the case this time, unless, again, we see significant changes in the economy. We expect this to be a prolonged and gradual cut down to whatever we think that equilibrium rate's going to be, which is still to be debated. The risk to our outlook is really that the Fed could wait longer and cut less than this year for our forecast. And that's a little bit predicated on their mantra around inflation is seemingly being adjusted. Previously, the Fed was really emphasizing that it wanted to begin normalizing interest rates well before inflation reached that 2% target. But that rhetoric has shifted towards the need to see definitive evidence that inflation is on a sustainable path towards its target. And that shift, while seemingly a little modest, is pretty meaningful. I think they were very comfortable, or at least they expressed a high degree of comfort with cutting early. And that's shifted. And as we've seen, this Fed has been tried to be very upfront with projecting so they don't surprise markets. So that change in rhetoric they really want to see that inflation's on that sustainable path towards target might mean a delay in ultimately the first rate cut we see. But At this point, given the current economic data and expectations, we expect 3 rate cuts first one beginning in June and 2 more to close out the year. But we expect, as we've been saying for a while, that rates are going to be higher for longer. Again, we're coming off of that ZIRP world where we had 0 interest rates forever. Now, what that means to an economy, obviously, the impact of the increases that we've seen to date have not been completely felt in the economy. And we go back to, we always talk about, a lot of, especially on the corporate side, a lot of refinancing was done when rates were at extremely low levels. And they haven't had to refinance significantly at these higher rates. So that will come at a cost at some point. The resilience of the economy and especially the jobs market has been surprising to a lot of people. There are some signs of cracks, and we still there's a lot of concern, especially over commercial real estate, and what the ultimate impact is going to be. But that's been probably one of the more isolated and one of the fewer signs where we've seen real stress in markets and economy. That hasn't bled through to the rest of the economy yet. We went through the regional banking crisis. We seemingly have come out relatively unscathed. It was idiosyncratic in that there were a few lenders that were over their skis or over levered, or their portfolios were ill positioned or not well hedged, and they paid the price for that. That doesn't seem to be systemic. We're not seeing that bleed through to other lenders. So the outlook is still for maybe a little bit stronger than what we thought was a muddle through economy. But ultimately, the tightening financial conditions will take a bite out of economic growth. The Fed's pretty strongly on the tape that that's the intent. They need to see inflation come down. The global impact has been a little stronger than what's been felt in the U.S. The U.S. has been more resilient and stronger than the rest of the globe. We expect that probably to continue. And some of that is the focus of our economy. If I look out and I see, commodity inflation is starting to worry me a bit. The Fed is always, at least the rhetoric has been that they look through, especially energy inflation, which we've seen peak. It's oil has continued to rise. Some of that is geopolitical, some of that is supply constraints, and some of that is expectations for economic growth. So I don't think that will necessarily be a primary driver of Fed action. But certainly if we look at it in the holistic view, rising commodity prices will add inflationary pressures to the economy. So if you ask me next week, answers may be different. But as of now, I think we're comfortable with this position. And what that means really from a portfolio standpoint is, we still view, we think obviously the asset allocation that was adopted is perfect for the current environment. What that did was it allowed us to de-risk the portfolios to take advantage of the higher rates that are being offered across a number of asset classes, and really deploy capital to what we think are the best opportunities in the market right now. And we hope and we expect that will lead to better performance for the systems down the road. With that, I'll open it up to any questions.
Dave.
Thank you, Steve. Excellent summary again. I guess as I look at trends, if you look since 1996, when there were 7,300 publicly traded companies, to today where there's about 4,300, private equity is gobbling up these publicly traded companies in a way that obscures much of the financial data, and the regulatory scheme that is in place for publicly traded companies becomes very obscured when we don't have less companies, they're just private. And I'm guessing I guess my interest in thinking about that trend is as trustees of a public pension fund, what safeguards do we have with the shift to private equity owning many of these companies to understand the fundamentals of those companies in ways that we would easily have the ability to do that if it was publicly traded? I guess I'm interested in how that trend should raise concerns or add another level of scrutiny to the ways in which we think about balancing a portfolio?
Been an interesting market, and you're right. The amount of transparency that we see, especially from a reporting standpoint, has narrowed. Some of that is where we are in the cycle as well. I will say that there's been a fair degree of consolidation. So some of that is not just taking companies private, but also consolidation under a new ticker, right? So 3 companies become 1. And where we are in the cycle, if we think about private equity cycle, ultimately most of those firms that get taken private, the end game is to retake them public, right? If they were taken out as private, it was an opportunity to adjust their financials and then ultimately to sell them back. What we've seen is there's a tremendous backlog, right? That realization in the private equity markets came to a grind. We're not seeing a lot of those come back to the public markets. But you're right, there's the lack of transparency in private markets can cause concern for the ability to kind of infer what the broader economic health is. There are a number of good data providers that aggregate data on private companies. Typically it's not like we see with public where a name is associated with it, but we see that. And when we look at our portfolio specifically, and especially more on the private credit side, which is where we've been focused, we have a lot of insight into the health of those companies, and that gets both extrapolated into the companies we own as well as the companies they're viewing. So if we look at some of our managers, they have tremendous databases on private market information, and that obviously is not necessarily readily available to the broader market, but it gives insight into the health of those companies. And what we like partially about the private credit sector is that where private equity it can go dormant from the standpoint of, as we know, we have investments in private equity that have very long tails, right? So some of those companies, we're not having any realization, they can extend, and it's not unusual to see 15, 20-year funds with investments that haven't been able to be realized. And that becomes very opaque into, they can mark those companies at whatever they want to market at, essentially, right? There's obviously they have valuation policies and they have audits, but on the private credit side, those companies are cash flowing, right? Because they've borrowed money. Their ability to repay is being analyzed continuously. And the fact whether or not the checks actually hit the account is very transparent and readily available information to investors. So we're a lot more comfortable taking risk on that side right now. From the broader standpoint, what does that mean as to the health of the economy? I think what you have to do is you rely on secondary and tertiary information, which is a lot of purchasing information, flow information, that these companies, that are results of these companies, you may not be able to see their specific financials. But from that secondary and tertiary information, what kind of flows are coming out of those companies, right? You have lots, and whether that's hard data or survey data, softer data, survey data that those companies participate in. It's just a shift in what information is available. But there are a lot of very smart people and very good companies that look at and analyze that information. So it doesn't concern me from the standpoint of where we have less information on which to act. It's just we have different information and different sources of information. Hopefully that makes sense.
Yeah, I appreciate that. One other question is, in just reading from the media, it looks like in the multi-billion-dollar one-time spending bill that the legislature appropriated additional resources that would flow to KRS. I don't know if the governor has signed off on that, or if we can anticipate any line item or otherwise vetoes. But I guess I'm interested if that infusion of new money were to arrive. Do you feel like we're prepared with a strategy to put that money to work prudently and expeditiously? Or what's our planning as we anticipate that?
Certainly. I think, we have capacity with a number of mandates and a number of asset classes to add additional capital. We would look to do it obviously, and you're exactly right. We want to deploy it prudently, but as quickly as warranted. I think we have both from a mandate flexibility as well as the ability to employ proxy. And so, as we know, some asset classes, especially on the private side, as we've seen, take a long time to deploy capital, from getting new managers, committing capital, to having that capital called. That can take time. So we've really been using more proxy asset classes to get it where we see that it makes sense to get it invested, right? We've talked about, for this isn't always going to be the case, but right now the opportunity cost of carrying a little bit higher cash is not nearly as significant or penalizing as it has been in the past, which is great from an allocator's perspective. But we also want to take advantage of the opportunity we see. If we were to get a big check right now, I think we can deploy in a matter. Obviously we can deploy proxy assets on a day-to-day basis. We manage our proxy assets on a day-to-day basis. Those are in liquid investments, and then the ability to source additional mandates where needed. That runway is a 3 to 6 month runway from kind of sourcing to deploying. But I wouldn't anticipate that money sits uninvested in that time. We may carry higher cash balances, but we would do that based on a view and not being forced into a position of doing so. I think for a while we felt, we obviously there were a number of systems that had higher cash balances. We're doing a much better job now about managing that.
Thanks.
So it doesn't give me heartburn to if we were to get a sizable check in any account. In fact, from some perspective, I think this is a great time to be liquid, to have capital, and to be able to take advantage of opportunities. So it's more exciting than anything.
Thank you, Madam Chair.
Thank you, Dave. Are there any other questions? Steve, thank you for a very good report. And I also want to thank Pruitt, Dave, Ramsey, and Pam for being on the investment committee. And it's a lot of work being on the investment committee. And I'm sure that Steve appreciates having people that can come in and ask questions and help in the decision making. So thanks to all of you. And Steve, thanks for teaching me a new economic word of muddle through economy.
Maybe it'll take. We'll see.
Okay. Thank you all very much. And so next, Dave, you want to give the update of KPPA?
Sure. And I would comment. I think Dave Adams' question is precisely the kind of question that trustees should be asking us, and fulfilling their responsibilities. With your permission, Lynn, I'd like to ask Steve to comment on one more thing.
Sure.
Steve, could you bring the trustees up to date on bringing money in-house, where we are versus, say, 18 months ago, and what your plans are going forward?
Sure. I think the most significant change has been, we've been able to bring in-house as we rebalance the core fixed income portfolio. We brought in a portion of what was being managed externally in a short duration product. We were able to bring that in-house and manage it in a full core product. Where we are relative to where we can be, I think that's an ongoing conversation. We're still a smallish staff. We hope to be able to grow that in the coming quarters. But from the standpoint of where we are overall, internal assets, including public equity, proxies, core fixed income, and liquidity, we're probably around 30%-ish managed in-house. We're going to be doing, as we talked about with the rebalance of the core, we're doing a full review of our core investments. So our core fixed income, we're going to look at making sure that we have the right strategies, the right managers. So in partnership with Wilshire, we're going to be doing a full review of that. And that will entail, how much passive versus active do we want in the core portfolio? How much does it make sense to manage internally? And making sure that we have the right managers and the right strategies.
At some point, we'll put a pencil to this in terms of the savings, as of bringing them assets in-house versus having them outsourced. And it's
I
going to be
think
a
on-
big,
On
number.
core, I think our number was around 1.5 to 2 million a year in savings. And I go back to that, not only, so that's significant savings from just purely from a fee perspective, but and it also it provides us some flexibility. If we look back to we talk about that rebalancing. That rebalancing again was moving away from a tactical positioning, short duration, and anticipation of rising rates to being more benchmark-like in our duration. But it allows us the ability to be flexible and tactical. That's an area where we may take a view if we think that at some point we're going to see a significant decline in rates. We might want to extend duration, and that the ability managing that in-house also provides us that ability. And I go back to that tactical positioning in the core portfolio that obviously was part of the decision of the investment committee and the board to implement that tactical positioning was a tremendous benefit to the performance, which obviously means on a dollar basis was hundreds of millions of dollars of additional performance for the systems due to specifically to that positioning. So, we think that's the value we can add. That's the value we can add in managing some of these assets in-house.
Yeah. I wanted to call you to the trustees' attention because we've made a big move. My memory serves me, it wasn't too many years ago. The 30% was under 20. And
for sure,
having moved 10% of a huge amount of assets is a big deal, I guess you call it. I'll get back to my topic, but Lynn, I want to thank you too for your compliment of the staff. Come April, I will have been here 8 years, and one of the things I have been really pleased with is the staff, the quality of the staff. They're competent. They work well together as a team. We ask a question in the employee survey. The question is, do I agree or disagree? My colleagues pull their weight, and I think the number is probably 97% agree with that statement. So it's a great team effort. I like them. That's the other thing I'd say. I like working with them. I look forward to coming to work, and I talk to a lot of people who feel the same way, and they'd rather be here than sitting home and with a screen. We still have to discount the cost and the time of commuting, but nonetheless, people like working with other people here. You have a written report dated April 8th. I'll be happy to take questions. I'll speak to two things that aren't on that report, the kind of moving targets that were happening fairly recently. The question came up as the governor signed the House Bill 1 and House Bill 6 that involved appropriations. I should know the answer to that. I don't. I think he has, but I'm not positive of that. I'll know in the next couple of days, and we'll confirm that. House Bill 1 is the drawing money out of the rainy day fund, and the K-9 is going to get $50 million a year for 2 years, and the state police are going to get another $25 million a year for 2 years. It's the way the state police are going. We're going to be over 80% funded in all likelihood versus under 30 just a couple of years ago. But in addition, House Bill 6 is going to give K-9 has $250 million a year for 2 years. So we're going to get over a 2-year period, $650 million on those two plans. And the prior legislature in the 60-day session gave us a total of $690 million. So over the course of 4 years, we're going to get $1.34 billion of additional appropriations on top of the actuarial actuarially recommended contribution, the ARC. I'm stumbling for the word. With over above the ARC, and the ARC has become reasonably conservative. So we're getting a kind of a double whammy here in terms of assets coming into the plan. 5 or 6 years ago, the combined plans assets for K and state police were just somewhat modestly over 2 billion, and we're getting $1 billion, $1.3 billion over a 4-year period in new money. So I think it speaks well to the legislature. The legislators are more sensitive and aware of the situation. They're more aware of the value of putting additional money in, and we can't say enough for the way that we're being treated by the legislators. The other thing is Ryan Barrow will be coming on May 1 in a consulting role, and July 1 will become the new executive director of KPPA. He and I and a whole flock of people are going to be spending time beginning May 1 through May and June to begin with. I'm setting up right now so far 22 meetings, departmental meetings. Almost every departmental head would spend an hour, give or take, some time getting acquainted personally, but understanding what that function does and some of the challenges that exist. So he's going to have an interesting ride for a couple of months, and I think it's going to be informative for him. It's going to set a tone that he is. I'm sure he's open. He is approachable as an executive director, and he wants to interact with people on a daily basis. So, yeah, no shut doors, hopefully in his administration. So I will take questions if anybody has any.
Any questions for Dave? Dave, can I ask my always question, and what's the status of the office space for investments?
I always have to turn that over to Rebecca because she talks to the finance cabinet about it. But it's please ask the question. But
There it is, Rebecca.
I have an update. As of a week ago, we finalized everything with them, and so it is on them. They are ready to post the invitation. So I checked in with her this morning. I have not yet heard back from her. Is it out? But I had asked her previously to let me know when it goes out. So I hope it's within a week or less. But
Great. Thank
yeah.
you. Yeah, I think everybody knows that's important, not just for Steve and the staff, but also for our intern program. We have not been able to have interns since we have not been able to have an office, since we have not had an office.
Yeah.
So Rebecca, thank you. And hopefully we'll be soon.
And I know David's got his hand up, but just to comment on that, throughout the agency, we are seeing interns come in on an internship and then end up moving permanently into staff. And it's a really good opportunity for them to get to know us and us to get to know them. I could point around to any number of departments that said that person was an intern, and now they've been here a year or two.
Thank you, Dave. And thank you, Dave Atkins.
Thank you, Madam Chair. Dave, I can only commend the internship program. We've used it here at the Council of State Governments as a great workforce development. The one thing I would recommend that has worked very well for us, because many interns are looking for that internship to be a credential, is that you actually name the internship in honor of someone, a former governor that was particularly useful in the pension program, but you call them, Wendell Ford Scholars or Wendell Ford Fellows, and they put that on their resume, and it is a credential that they can indicate that they're very proud of being named to that particular internship. Kids today are very focused on credentials and separating themselves from others that they're competing with. So we've found that that's very helpful to make it a recognition tool as well. In any event, your internship comment prompted that. But Dave, I just didn't want the legislative appropriation to pass without commending you. In your 8 years of leadership, I believe that you have restored trust and honest dialogue with legislative leaders in a heightened atmosphere of scrutiny that could have gone a lot of different ways, but overseen a major reform of the system that I think has yet to fully play itself out. But the level of accountability that the legislature entered into a collaborative process with the retirement systems, could have gone a much different direction. And because of your competence, expertise, and willingness to be open to an honest dialogue with legislative leaders, I have to believe that this infusion of money is more than just a coincidence of having the funds available, but in competing interests in a state budget, to have the amount of money that the legislature has appropriated to keep their promises to their retirees is, I'm guessing it's unprecedented, and in many ways sets us on a course to solvency much, much faster. And I think to the extent that you have a legacy, Dave, it probably will not be noted to the extent that it should be in the future, but that kind of investment reflects a trust in the management of the system that wasn't here 8 years ago. And I know you have a team that you will share credit with because that's who you are, but it shouldn't be overlooked. And Madam Chair, I would recommend that we ask our staff to prepare a formal resolution that would be sent to legislative leadership, including the leaders of the budget committees of both parties and legislative leaders, to commend them for their recognition of this as a priority, and that on behalf of our members, we commend them for taking the action to partner with us in assuring that the promises made to our retirees are promises kept. I don't know if there's any precedent for such a formal recognition or resolution, but I believe that given the investment over the 2 years and the prior years, it's a significant recognition that the public pension system is a public good. And I think we would be remiss not to take some formal action to recognize the executive branch and legislative branch leaders who made that possible. So I don't want to make the motion without specific language, but I would recommend that our staff prepare for our next agenda some formal action that reflects, once we know that it's finalized and the governor signed off on it and it's all enrolled and certified. It's something that we should not let go unnoticed officially.
Dave Atkins, I think you're exactly right in both cases. I'm going to, Sherry, do we have a June meeting?
Yes, ma'am, you do.
Okay, so we have one more meeting with Dave. Let me say that, ask that Steve, Mike, Dave, the three people with all this information, work together, and Michael, work together to put together a resolution for that meeting. I think, Dave, you did a great job of kind of explaining what should be in it. And let me ask Michael Board if he kind of took notes on that, or if he could replay the video. Would you be comfortable with that, Dave Atkins? Bring it back in June?
Yes, I think we would be wise not only to pass a resolution recognizing Mr. Eager's significant leadership and contributions to the actions of the legislature, but another resolution that would also commend the legislature and the governor and the finance cabinet, anyone who had a hand in it, recognizing their commitment. So
I concur. I've told Dave a lot, and I think probably everybody on this meeting, most of us, except I think Keith, are fairly new on this board, and thanks to the work that they've done, we've got to watch it grow and grow in the right direction. So I think all of us feel pretty good about it. So if Michael Board will take the lead, if you feel comfortable with everything Dave said, why don't we pass this for the next meeting and we'll come up with a couple of resolutions?
Yes, ma'am, we can do that.
Okay, and then I would say, if you don't mind, Dave Adkins, to if Michael has any questions, to get in touch with you.
Happy to help.
Okay.
Thank you very much.
Lynn, can I make one?
Of course.
Yeah. I particularly like your idea of the name associated with the internships. I think that's a great idea. I have a rector who says that's a blinding flash of the obvious, but it really, I think, is a good idea. I'm looking at my screen, by the way, and I'm going to comment on one other thing Dave Atkins said. I have 20 boxes on my screen, and I don't know who else. So I'm limited to 20. I'm not scrolling down. I don't want to risk anything. But in 8 of those boxes are people that sat with me at PPOB or in a senator's office or spoke to Chamber of Commerce or wherever it might be. I mean, eight of these people on the screen have all been involved in that. So I'm sure the number is actually more than that. And they get a lot of credit. It gives the whole system credibility. I used this I commented on this about a month ago, but I can be at PPOB and Senator Higdon says, I see Aaron Surratt out in the audience. Aaron, you need to come up and talk and explain this to us. Just the credibility the staff has developed. They know them by name, they know what they do, and they respect their views and the information they have.
That's great. Steve, I guess you heard enough from Rebecca that I don't mean to be giving Dave's role, and I'm sure he will tell you this after the meeting, but it's time to think about bringing the internship program back. So that'll be yours.
Absolutely. I'm excited to restart it.
Okay, anything else for Dave? Dave, anything else from you?
No, just bear in mind the intern program is alive and well in here in Frankfurt in other areas of legal or wherever it might be. It's not that we're not doing it, it's just the investments area that's been suffering. I'm done.
Okay. With that, I think we go to John.
Thank you. I might mention initially that I've got some background noise here that I can't do anything about. So I think that I'll just go forward at this point.
John, we can't hear it.
You can?
We cannot. These audio systems block that out.
Okay, good. Our last meeting was just 3 weeks ago, but I'll mention a couple of things that have happened since then and emphasize some things that we talked about last time as well. We've talked about the end of the legislative session. We're now in the veto period where the governor considers signing bills or vetoing, or in the case of budget bills, line item vetoing portions of those bills. The housekeeping bill, I think that it actually got through in the last couple of days. The House and the Senate were both favorable towards that. And I participated as well as many in the staff in communicating with the legislators to try to get that through. So that's an achievement for everyone at this point. A reminder on using your email when you're doing the business of the KRS. All of that's to go through the government email system. There's a bill that was passed that time that pretty much requires that. Not pretty much, it does require the use of the email system, and the purpose of that is to keep subpoenas and similar things out of your personal email if there are any issues that arise. I met with the treasurer, the Kentucky treasurer, about proxy voting that they have a great interest in. As you may know, the proxy voting law that was adopted in the previous legislative session was initiated by this treasurer, who is now the state auditor. I think that we've shown well in complying with that law, and in fact complying with that law before it was actually came into effect. You all have probably received reminders if you've not done your ethics disclosure. That's due by next Monday. You do that online, and it's a procedure that's focused on relationships. They're not interested in how much money you've got or where it is, where your investments are, but the purpose is to disclose relationships of each person with others that have an effect on state government. When Brian Barrow comes on the scene in May, I'll be meeting with him, as many other people will be, and just an urging to keep your educational requirements in mind. And those of you who have professional licenses or professional associations that provide educational opportunities, those qualify probably for meeting the education requirement for the retirement system. Also, at the from time to time, the internal audit people will recommend articles for reading. Any reading that you do that's associated with it qualifies as well. So just a reminder on that. I don't have anything additional at this point, so I'll give it back to you, Lam.
Hey, John, you said something to begin or somewhere in this conversation that first time I'd heard it. It is a requirement for us to use KRS or the KRS KY.RET.
Yeah, we've been encouraged to do that, but it's going to be a state law that requires that, and there can be consequences for ignoring it as well.
So was passed this last legislature?
Yes.
So it's effective, I guess, what, June 1 or something?
I think it's in August that the effective for that, giving the local governments time to implement email systems and such.
Okay, thank you. Let me add to this. Sean has put the KYRET email on my phone, which has been helpful. And also he has let me know that if you wanted to have a separate phone, and Dave, is that still current, that if you wanted to have a separate phone with your KYRET, it is available?
If you approve.
Okay, so there's two options if you need it. And I think they both run through Sean Case.
Not encouraging it necessarily unless somebody feels they need it. John Chilton has one.
Yeah, they asked me if I wanted one. I was able to manage by putting it on my phone.
Yeah.
Is there any downfall to having them, like your personal emails or your company emails and the state emails on one phone?
No, not according to Sean. Well, I should say this. Mine keeps asking me to combine my contacts, and I just say no.
Yeah, if you add the KBPA email address to your phone, it's a separate app. So it keeps it separate. It doesn't let you do things like screenshots and downloads, and it protects the data within your KBPA email from your outside device. So there are security things within that are really helpful, but there's no, I don't think it would let you sync on your personal device, but it gives you a separate app so you can have notifications come up that you got email.
Thank you.
Okay, any other questions? And thank you both, Dave and John. With that, we have a closed session, this time with Michael. And is there a motion to enter into closed session pursuant to KRS 61.810C to discuss pending litigation?
I so move.
Thank you,
Second.
Mary. Thank you, Ramsey. Okay, all those in favor, please say aye.
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 Aye. Okay, is it Sean that's to take us off of Facebook?
It's Philip today.
Okay. Would you let us know when we're off, please?